everyone, and welcome to the IFRS 8, which is a segment reporting. What is a segment reporting? Um, Chapter number 22 kind of a cover all the expect when a company has a subsidiaries and those subsidiaries are in a different business than the major company. Should the company should disclose all the subsidiaries or they should just disclose those subsidiary which has a significant revenue? So this kind of basically addresses this issue of reporting a segment of a company. So the segmentations can be different. It can be more than one. It can be different industry. It can be geographically different. So let's discuss and dive into the chapter. So this chapter discuss about when a company come up with a financial statement, which is a consolidated financial statement. So in this case, should they operate, should what they call segment reporting? What is the additional segment reporting should avoid? What information they need to provide as a segment? What is the basic definition, what we call operating segments? So this cover in this chapter. And what information basically they need to disclose? Do the management has any role in this whole overall standard or not? So this kind of a cover in this chapter. I haven't covered those aspects which links to the disclosures of AASB. I discuss in that, but it's not testable for the final examination. So segment reporting. Usually, a company has involved in several companies. Like take an example of Sunway. Sunway is a very big group. Sunway Properties, Sunway Hospitals, Sunway Medical, Sunway Universities, Sunway School Systems, Sunway Education, Sunway Travel. So when they are coming up with one consolidated financial statement, so which of the segment should Sunway report? Do the Sunway has to report all the segments, or should they require to report just one segment? So first of all, before we talk about the reportable segment, we have to understand what is the operating segment. So in the company, they have to mention that required to disclose about the operating segment. The operating segment is a segment where the revenue and the expenses incurred on on that entity is disclosed. But before we dive into what is operating segment and what is a reportable segment, we need to discuss about the advantages and disadvantages of the segment reporting. Advantages is that, for example, there is one survey and he discussed about all his subsector, means doing the segment reporting for every segment Sun may have. So advantage is that it will give a very comprehensive picture, like how their performance is going, how good or bad they are doing, what is the future prospect of this company, and not only they talk about the financial but non-financial information as well. So it will give a very comprehensive picture that what the company should do in terms of while they are doing the segment reporting. So nowadays, the shareholder really appreciate if the detail is given to them in terms of the segments. Moving further, now this discussion about the management is less likely or more likely have some issues when they do this segment reporting. When they detail out their consolidated profit or any of the detail of the financial statement into the segment, so their competitor know what is their strength and weaknesses. Even they can build on this strength and weaknesses, and the risk for the takeover will get very high. So this is the 4 points that discuss about the competition which company has to face when they do their segment reporting. Next is about what is AASP 8, which is IFRS. The English version is IFRS 8 G segment reporting. The definition for segment reporting is an entity should disclose information to enable the user of financial statement to evaluate the nature and the financial effect of the business activity in which they engaged and the economic environment in which it operates. So the company is supposed to give a detail out about its economic environment and about the engagement and about the activities it has. So this is very important standard in terms of a segment reporting. And nowadays, many conglomerates working together means many companies are working together as a conglomerate. So segment reporting is quite in this. So this standard pretty much cover all the aspect to the segment reporting. Next is about the introduction to AASP. So we continuing the slide. They say the company needs to give out information about the segment reports. The segment report is a management approach. What is a management approach? Means, for example, um, the decision of the management changes if one of the segment is missing. So management think that segment is so much significant that if we exclude that, our decision might change. So this standard believe that you need to provide all the information, all that particular information which you are internally using for that particular segment. So this standard does not impose the companies you have to give this disclosure, have to, cannot. But this standard say, hey, you just disclose all the information which you are using internally for that particular operating segment, and that's it. So they use a word of chief operating decision makers, means it can be anyone. It can be a CEO of the company, it can be a committee or board of director, it can be board of director who is making the decision on behalf of a management, which segment to include and which segment not to report in the annual reports. So then the rationale behind the management approach, why the standard approach use the management approach rather than the rule-based approach. They say we use the management approach because already the information is there. The information is already there. So whatever the management is using, we can just use it for the annual report. So it will also allow the users of the financial statement to view the operations through their eyes. So if we display that information which is internally used by the management, it will give you some insights about the operations. The information is already readily available. It is very cost effective, means you don't need to prepare additional information. You just copy and paste your internal information and display as a annual report. That's it. So there are many advantages they mention why we are using the management approach rather than we are telling them to use certain format to display that operating segment. Then the definition of operating segment is that there are three different criterias. First, the operating segment is the one that engage with the business activity, especially revenue and expenses. So you might be thinking that, hey, all the companies should have a revenue expenditure. So all segments should be reported. So all segment are operating segments. No, it is not like that. First of all, there is a very clear difference between the reporting segment and the operating segment. So operating segment is the one who participates in the revenue and expenditure. What is reporting segment? I will discuss later on slides. The main thing in this, some of the segment of the company does not disclose the financial information like revenue and expenditure. For example, there is a head office. The office of the head office is only doing one thing is operations, means they are telling the other subsidiary to do this, do that, and some other thing. So they themselves is not participating in revenue expenditure activities or operations. So they are no longer a part of a segment reporting or operating segments. Second is, so because of they are not a part of it, so we can exclude even the head office itself. Second is whose operating results are reviewed by the entity chief operations. So entity has some participation in the revenue and expenditure. Second criteria, the CEO or the board of directors review this on a constant basis, and there is some discrete information or clear information which is available by the company. So these three criteria, it will identify any company as operating segment. Now, the question arises that, hey, do the auditors select this operating segment or the company select this operating segment? Like who choose this is operating segment or not? Or who fulfill this criteria? In the upcoming slide, they talk about the identification of segment. Normally, this tender leave it to the company. Company is the one who decide whether the segment is operating or not. Because if the standard make it very rigid, hard and fast rule, then the company has to rely on that, and it might cost them a loss because their competitor get the information of that segment, which company don't want. So The identification of segment depend on the company rather than any auditor or the standard itself. Now, who is the chief operating decision maker? We already discussed it can be anyone. It can be CEO, it can be CFO, it can be board of directors, it can be team of board of directors, anyone who decide which is operating segment and which is not operating segment, or which is a reporting segment and which is not a reporting segment. So can all the component of the organization deemed to be a part of operating segment? No, not every part of it. So this is very clear in this tender. That you don't need to add all the segments into the reporting. You can skip many of them, and which one you think should be there for a better decision making, you can add only that one in the financial reports. Then this slide is discussing about inter-firm comparatively. Means, for example, you have a company, you have one Sunlight Group has a segment like Sunlight Property, and they are comparing that properties with some other within group, other construction company. So one group might have two and three construction companies, different construction companies within one conglomerate. So the standard setter decided that their relevance is important because you can club their information together, but when they are different organization but doing the same business within that, so you can do the comparison of the results for the operation segment. So this is the concern they have, that you might think that one sale is more than other, so we should report A over B because A sale is more than B. But this concern has been addressed by the standard that they decided the increase in relevance of the information outweighed the concern for comparing. So their information is more important who affect the decision of the user rather than we are saying one sale is more or other sale is less. So this is the basic criteria they have taken to include as or define as any operating segment. Now, the second part is what is the reportable segment? So, among all the operating segment, we have to select which one we need to report in the financial statement. So, there are three criteria. So, for the reporting segment, I think only two over here mentioned. Oh, over here they just discuss about, oh, in this paragraph number 5 to 10, the reportable segment definition is given. So, you can ignore this slide. Basically, the definition is here. So we consider a quantitative method of considering some operating segment to be a reportable in the financial statement. First of all, if its revenue is 10% or more of the company revenue, if its profit or loss is 10% of the whole absolute amount of the revenue. What is meant by the absolute amount? Absolute amount, for example, segment has a profit. Segment a company has different segment. Segment A, B, C, D. A has a profit of 10, B has a profit of 20, C has a profit of 30, D has a profit of minus 40, means a loss. So absolute does not mean that you include everything and consider this as a negative figure. Absolute means total profit of the company is 30 plus 20 plus 10, which is 60. Yeah. So 60 is absolute profit in this case. So if the company has 10% or more, 10% or more profit of the whole company, then it's considered as absolute profit. Means as a reportable segment. In the end, the assets, if the company and the segment has 10% or more assets, then it's considered as a part of reportable segment. So again, so there are three criteria: revenue, profit, and asset. If they are 10% or more than the rest of the company or the other entities, then it's considered as a quantitative threshold. We will consider that segment to be a part of reportable segment. Again, there is no hard and fast rule, although this is a three criteria. But if the company do not want to disclose the information, it is discretionary. So in the next slide, they discuss about it's a discretion of the company to select or don't select. So if the management believes this segment is useful, even they are not fulfilling the criteria, they can include that one. So it's up to them. So it's discretionary. Okay, going back, aggregation of segment. So if there are few segment whose nature is same, like I give you example like in a Sunway, there are two construction companies working together. So if their nature is same, their product and service is same, or their production process is same, or maybe they have the same class of a customer. So we have a discretion that we can combine segment A and B together into profitable form, and then we're going to report it. So we have the ability to aggregate these two information into one. Second is a few more things is if their methods are same, like the method of distribution they are using the same, the nature of regulatory environment is same. For example, one company has two, three banks under them, and so they come under the same regulatory authority, which is a Bank Negara in this case of Malaysia. So we think that we can aggregate. We have a choice to combine the profit of these two. Moving further is combining the operating segment for the purpose of disclosure. Yes, we can do that. Again, it's the same discussion which we have done before. Then, if the company has combining a segment of 75% of the revenue, so if a segment has a 75% of the revenue, definitely it become a reportable segment. Even the company do not want to disclose that, but the company also has to not only disclose the reportable segment, but also have to provide the reconciliation how the 75% come up, and they have to mention in the reporting of the segment reporting. So this was one of the point. If the company sale is like revenue is, if a segment revenue is 75% of the total company, then which is far more than the 10%. So it's definitely a reportable segment, and they need to include in the part of a reportable segment along with the reconciliation statement. And they give an example. There is company A, B, and C, D. They have a sales, loss, profit loss, and the assets. So we have to check which of them is 10% or more of the total. So for example, in the case of revenue and in case of asset, we believe that in case of asset, yes, this is more than 10%. Yes, this is more than the 10%. So these two companies become, yes, we need, this is a reportable segment. In case of our revenue, that is 1,525, the 10%, definitely mining is a part of it. 152, so manufacturing will not be the part of it. Chemical will not be the part of it. Agriculture, yes, definitely is a part of it. So we can see which one is 10% or more. But once it's come to the profit, we have to do the absolute amount, which I discussed earlier. So absolute amount over here of profit is 105. So 105, 10%. Agriculture, yes, agriculture is a part of it. 105, even agriculture is more than 75% of our total revenue. Chemical is again no part of it. So chemical overall also here no part of it. Then manufacturing is 25%, which is more than the 10% of 10.5. Yes, this is a part of it. Then the next one, although in terms of a loss. So next is 55%. Yes, this is also a part of it. So we can find that manufacturing, mining, and agriculture is a part of it, where chemicals is not the part of any operating or reportable segment. So this is what they ask about the reportable segment and the allocation. Should we allocate the resources or not? So this is a little bit discussion about like which one of them is a reportable segment, and in the end they do the allocation of resources. So next is about the growth of the construction of the operating segment. So if the operating segment grow over the time, at the start maybe it's not the operating segment, but afterwards it become, and it takes a very good keen of management judgment that this operating segment is growing and it requires to be reported. So they have the liberty to report. Next is the measurement of segment items, like what item should be there. So, okay, we have identified which is operating segment. We have identified which is reportable segment among that operating segment. So they say which things needs to be identified. So before that, there was a certain list of the item which required to be a disclosure part. But the new accounting standard, which is AASB 8 in Australia, and the English version is IFRS 8, they say we leave it to the management. Whatever the information they provided, we are okay with that. So there's no new or rigid rule that you have to follow only this information. Again, they discuss a lot of discussion in this chapter is about the discretion of the management to follow the rules. The company has the information. What are the revenue, profit, loss they want to disclose? They can disclose. If they even don't want to disclose, it's up to them. Even they fulfill all the criteria. So this is a list of the information which is required for the segment. In the end, if the reportable segment is more than 75%, so you need a reconciliation statement. Some of the information that is required to provide in the exhibit 22.3 is given. I believe you can read the slides very clearly. Another thing, when you are presenting segment, a reportable segment. So there is some non-financial information come up, like who is the board of director of that segment, what is their governance, what is their operations, what is the environmental factor they are following, what is the social factor they are following. So ESG is a non-financial information disclosure. So again, this is a discretion of the company to disclose or not, but the standard encourage the company to disclose the non-financial information as well. So this is the end of our today lecture. I hope you enjoy it and stay safe. Take care. Bye bye.